Thank you for joining me. Today I want to go over a stock that dropped over $1,000 in a single day. That day being today, and the drop being 0.3% of its value. So I'm talking about Berkshire Hathaway, which yesterday was over $320,000 per share. And today it's only $319,000 and change. Anyway, so should you buy Berkshire Hathaway? And why should you buy Berkshire Hathaway? So, number one, the earnings per share is $16,000, which is, a PE of 19.5. But besides that, 19.5 is not a bad PE per se. It's also not a great PE, but I don't think that I currently would be buying a stock at 20-ish PE, because there's certainly better stocks out there. Now, if we're looking at growth and we're looking at value, like PE is generally the value, but if we're looking at growth and dividend and all that, a PE of 19 can be a buy, can be a sell, can be a hold, can be anything really. That generally being the three options. So the dividend and yield is 0, which historically has been the case for Berkshire Hathaway. And the growth is 3% year over year. Past year was 8%, the year before was 7%. So over the past 4 years-ish, there hasn't been too much growth, but there has been some growth. Now, the profit was hit a little bit harder than that, but certainly 8% is not a bad growth for a stock, especially a stock of that magnitude. We're talking a market value of about $500 billion. So a growth of 8% would certainly be great. 3% I'm not too sure about, especially with inflation being 2%. So right now, I'm not really sure if I would buy that. Now, so as a dividend investor, obviously this is not the stock for you. As a growth investor, this is not the stock for you. As a value investor, this might be the stock for you, because historically it has done very well, and with Warren Buffett at the helm, you always know what you're getting, and Warren Buffett has not seen the kind of investment opportunity that he had for the previous half century. So things could certainly turn around, and quite quickly, for Berkshire Hathaway. And I would say PE of 19.5. Their forward PE is slightly over 19. So as a value investor, I think it kind of makes sense to buy Berkshire. One thing that I would definitely be concerned about is their reinsurance business, because if there's major catastrophes, major disasters, the reinsurance business could lose a lot of money, and obviously climate change kind of makes that more likely. So with that said, I don't have $320,000 to invest in one share. They do have Class B shares, which is one Class A share equals 130 Class B shares. So they're under $300 right now. So Class B shares would certainly be affordable, even for me. Still, I'm not going to buy this because I think there's better opportunities out there right now. But Warren Buffett, if he finds good investment opportunities, could certainly grow at a significant higher percentage there. The profit ratio is about 10%, 10 to 15%, so they could certainly be growing at 10 to 15%. Hasn't happened recently, but could start to happen again. So if you're a value investor and you're looking to hold this stock for years into the future, I think it might still make sense to buy it. But again, if you're a dividend investor, certainly don't buy the stock, because there's no real chance of ever getting a dividend. And as a growth investor, right now I think there's better opportunities, but in the future it might become viable again. So certainly one of the fun stocks to look out and look at every day. Certainly not huge moves either, but if you have one share for $320,000, it's kind of fun to look at. Anyway, if you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. Have a good day.